SpaceX may become one of the most important IPO stories in modern finance, not only because it is a space company, but because of the numbers behind it. Reports suggest SpaceX could target a valuation of around $1.75 trillion. It may also seek to raise about $75 billion, which would make it one of the largest IPOs ever. But the real question is simple. Why would investors value a rocket company this highly? The answer is that SpaceX is no longer just a rocket company. It is becoming a future infrastructure company. First, let's look at rockets. SpaceX changed the launch industry by making rockets reusable. That lowered launch costs and increased launch frequency. In an industry where access to orbit is everything, this is a major advantage. But rockets are only the foundation. The bigger business may be Starlink. Starlink is SpaceX's satellite internet network. It reportedly had about 4.6 million subscribers and more than 7,000 satellites by 2025. That matters because Starlink creates recurring revenue. Investors usually value recurring revenue more highly than one-time launches. Reports estimate Starlink generated about $12.3 billion in 2025 revenue. That could represent a major share of SpaceX's total business. This changes the investment story. SpaceX is not only selling launches, it is selling global internet access. That makes it closer to an infrastructure platform. Now consider artificial intelligence. AI needs data, computing power, energy, and connectivity. SpaceX sits near several of those trends. Satellites, communications, launch capacity, and potentially AI-related infrastructure. This is why some investors compare SpaceX to companies like Amazon, Apple, or Nvidia. Not because the businesses are the same, but because each became critical infrastructure in its own era. Amazon built commerce infrastructure. Nvidia became essential for AI computing. SpaceX may become essential for space, satellite internet, and global connectivity. That is the bull case. But valuation creates risk. A $1.75 trillion valuation means investors are pricing in enormous future growth. At that level, SpaceX would need to justify expectations across multiple businesses: rockets, Starlink, Starship, defense contracts, and future space infrastructure. There is also execution risk. Starship remains central to the long-term vision. If Starship succeeds at scale, SpaceX can launch heavier payloads more often. If it faces delays, the growth story becomes harder to justify. There is also Elon Musk risk. Musk is one of the biggest reasons investors are interested. But that also creates concentration risk. The company's identity, strategy, and market narrative are closely tied to one person. Finally, there is regulation. SpaceX operates in areas connected to national security, telecommunications, defense, and international infrastructure. That means governments will always matter. This is not a normal consumer technology company. So what does this IPO really mean? It is not just about buying a space company. It is about whether investors believe space infrastructure will become one of the next major markets. If SpaceX succeeds, the IPO could become a defining financial event of the decade. If expectations are too high, it could also become a lesson in valuation risk. The market is not only buying rockets, it is buying a vision of future infrastructure. And that is why Wall Street is watching SpaceX so closely.